Hello, entrepreneurs! Looking to upgrade your business structure? Converting your partnership into an LLP can offer you greater protection, flexibility, and tax benefits. In this video, we'll walk you through the entire process of converting your partnership into an LLP and how Filings Corner can assist you every step of the way. Why convert a partnership into an LLP? Here's why converting your partnership into an LLP is a smart move. Limited liability protection. Your personal assets remain safe from business liabilities. Perpetual succession. The LLP continues even if a partner leaves or passes away. No minimum capital requirement. You can start an LLP with any amount of capital. Tax benefits. LLPs avoid double taxation and enjoy tax deductions. No mandatory audit for small LLPs. No audit required if your turnover is less than Rs 40 lakhs or contributions are less than Rs 25 lakhs. Separate legal entity. An LLP can own assets, enter contracts, and sue in its own name. Legal framework for conversion. The conversion process is governed by several key regulations. Limited Liability Partnership Act, 2008, Partnership Act, 1932, Rule 18 of the LLP Rules, 2009, Step-by-Step Conversion Process. Here's the step-by-step process to convert your partnership into an LLP. 1. Partners' consent. All partners must agree to the conversion. 2. Check eligibility. Ensure there are no pending disputes or legal issues. 3. Draft LLP Agreement. Define profit sharing, roles, and responsibilities among partners. 4. File Form. 17. Submit the application for conversion with the Registrar of Companies, ROC. 5. File Form 2. Incorporate the new LLP by filing this document with ROC. 6. Receive LLP certificate. Once processed, you will receive the LLP certificate. 7. Transfer assets and liabilities. All business assets and liabilities are transferred to the new LLP. Forms required. The following forms are needed for the conversion process. Form 17, Application for Conversion. Form 2, Incorporation Document for LLP. Form 3, Filing of the LLP Agreement. Form 4, Appointment of Designated Partners. Documents required. You will need the following documents for the conversion: partnership deed, consent from all partners, proof of registered office address, PAN cards of partners and firm, financial statements, digital signature certificate, DSC of partners, no objection certificate, NOC from creditors, post-conversion compliance. Once your partnership is converted into an LLP, you'll need to stay compliant by annual return filing, submit statements to ROC every year, maintain books of accounts, record transactions as per legal requirements, income tax and GST filings, ensure compliance with tax authorities, statutory agreements, follow the clauses in the LLP agreement, conversion timeline and cost. Processing time typically takes 15 to 30 days. Costs include ROC fees, legal and professional service charges. How Filings Corner can help. At Filings Corner, we ensure a seamless and efficient partnership to LLP conversion. Expert consultation, complete documentation, seamless ROC filing. Post-conversion support. We assist with tax filings, compliance, and audits. Contact us today or visit www.filingscorner.com for expert assistance. Filings Corner, making business transitions smooth, legal, and successful.